Usually when I go on vacation, markets are very well behaved. Then you guys let it blow up. Then I had to make an emergency video. Then on the emergency video, what do I see in the comments? People fat shaming me. Fair enough. I've always been one who is very motivated by bullying. Being bullied in high school for being fat literally turned me into a competitive athlete and a monster, a medal-winning monster for competitive weightlifting. So I'm all good with it. So let's do a recap here. Let's talk market, though. This is important. So we have this parallel channel that I was playing to the upside, and I was looking for a continuation of the bounce. Then Trump came out with more tariffs, auto tariffs, and the market kind of blew up. There was also some other news and headlines on the peripherals. Pullback in data centers, new AIs coming out of China. The narrative of buy Europe, sell US has been gaining more and more steam. This is something that I talked about last week on a video. Then after a few days of really letting the idea saturate my head, I decided I don't like it. I feel like it's nonsense. I feel like that's going to be a flash in the pan. I don't feel like that's going to be like a persistent multi-year trend type of thing. How can you not own NVIDIA? You think NVIDIA is going to sell off and not come back for years, not maintain some sort of global dominance over the next 5 years minimum, or even just all the other stocks that are listed on U.S. markets? You're not gonna want access to those. No, that money's coming right back to the U.S. Even if there's a short-term war, even if the war extends. I have people in my TikTok comments saying you got to buy the defense stocks in Europe, and I'm like, what? You know who's going to supply Europe's mobilization? U.S. defense companies. So, be a major part of that. Why? Because we have all the best stuff. So, anyways, let's not get off track. Let's talk about the breakdown here, right? So we get the breakdown of the parallel channel on Friday. I mean, this is an amazing short setup. I did a review for in the Discord. If you want to check that out, it's free to join. Did I post it in the free chat? It is in the free chat. So if you want to see the, why this is such a great setup, and I even missed it on Friday. It's just this type of trade on Friday, this breakdown right here. This is a trade setup you really want to review, because this is honestly something like very early in the morning you can buy, and then you can just hold all day, and even swing into next week with with a decent amount of the position, or roll it into the next week, however you want to manage that risk. Great trade setup, And the other thing that's kind of setting up this week for a continuation to the downside, because right now my thought process is, as soon as you get that breakdown of the parallel channel, you start playing out this bear flag on the 4 hour, right? So now you got to look for 550 or 540. Then we have Google here. Google had a complete reversal. Up until the market actually fell apart and actually broke that parallel channel, it's not really something that you want to really load into, because there was all the signs of a bounce. I mean, Google was about to fire to the upside. If this had gotten over that EMA, this would have definitely carried its momentum. You would have gotten the cyclical wheel. You would have been back in the positive gamma. You would have, it would have continued for a rally that probably would have persisted for several weeks. Now, after the parallel channel breaks on the SPY, now you have this bear flag. Now you're in negative gamma, which can accelerate either direction, right? So now, when you get the reversal here on the daily, you gotta come look at the weekly, and you hate to see that, right? Because actually there was a golden setup. Like, this is one of my favorite setups. This is like one of the simplest and highest win rate setups there is, and literally I think of the only one that talks about it. I don't know anyone else that actually uses this. It's gorgeous, right? So this is the same type of setup that we trade on Apple, right? When you get the first plunge on the inversion here for Apple, you get that first plunge. So even though it looks like you've missed it looks like we've missed a good amount of the move. I think there's a lot more in store for Google. Same thing with Apple. I'm waiting for the daily to break down again, but actually I've already have loaded into this. I mean, the weekly, still looks like it's cooking to the downside. 185 minimum on Apple. I don't even think that's right. I think I'm looking for like 180 on the dot. So I would need to remap that, but I don't want to waste time doing that. I want to make this video super quick. So I'm looking for an extension to the downside for Google. There's a few names that we would be looking for some upside here, that being like Lunar, which I don't believe I have. Is that pulled up here? No, let's get Lunar up here. Intuitive Machines. So this one's interesting. We got some NASA contracts and stuff, and if we can get back over this EMA convergence, that might be interesting to the upside. Doesn't look very supportive on the 4-hour there, but the daily's starting to improve substantially, right? So, you get another push, you get over $9, it's going to get really interesting. Honestly, this is going to be best over... Yeah, it's going to be best over 1038, but I think you can get in a little bit early just if you can just confirm that this is going to turn into a bull flag. So that's what I would be looking here. There's also CAR. Again, with the auto tariffs, if they are sticky, keep in mind, these tariffs, he can take them right off. Let's say other countries capitulate before we have like another round of tariffs going live at the beginning of April. If they all capitulate, this could reverse on a dime in many ways. Now, some of these technicals are so, like with Google, you get a setup like that, you go to 11 RSI in the 65-minute, the likelihood that there's not going to be some drag, even if something improves with tariffs, maybe you get a short-term bounce and then it sells right back off, very likely, right? Even if there's positive news. But if the tariffs are sticky, not even just CAR, but like if you're looking at AutoZone or Advanced Auto Parts or, any of these, the trend that usually develops is people stop buying new cars because the new car prices spike. The used car market goes crazy. Keep in mind, huge driver for inflation there. And then people, instead of buying new cars, are more likely to not only buy used cars, but then buy the equipment necessary to fix their existing cars, right? They're more likely to do repairs than they are to just straight up upgrade, and they'll keep vehicles longer. And that's why it is, big for all these companies, even Carvana, even a company like Carvana, who I can't stand. I find the stock very frustrating. I'm still trying to short it. With leaps, mind you, nothing short term, nothing that can take me out of the game if it does develop a bounce. I mean, this daily is starting to fire back to the upside, and now you kind of have honestly, this type of catalyst, this is where you get a little, if you're short like me, you get a little shaky in your boots, because this type of driver can easily keep this stock alive. Like if they stay on, this type of driver can easily keep a company like this that probably should be cut in half from here, on a conservative estimate, can definitely keep them afloat longer. Maybe even another full year before we get the fundamentals to play out, or for the management to really get the pinch and the strangle. There's still, even with this positive catalyst, there still is a chance that this blows up. Remember, it all comes down to like people defaulting on their auto loans, big banks not wanting to buy the debt from Carvana, and now they've got some, funny business by having one of the board members who's also a family member who's now buying that debt. Since even the only bank that would buy the debt was Ally, and even Ally was like, we can't. These are horrible. This is really bad debt. Everyone's defaulting. We can't keep buying this from you because it's adding too much risk to our balance sheet. So, yeah, it's going to be a huge positive driver, but for someone like this, it still might not be enough. It could easily be enough as people just look for opportunities to express the opinion that tariffs are going to positively affect these companies, and so people will just rush in to the sector and then place their bets, and that's what these initial rallies are, right? So keep in mind, if those trends get confirmation, these go from just small bounces to extended multi-month rallies. So there's big potential for pretty much all those names across the board. You should keep an eye on them. And of course, like for day trading, I like to see these big key levels get broken, and when we break maybe larger ones, like maybe if we get over 135 and it still looks really strong, then maybe you set up for a swing and you look for us to kind of get through this chop area to 205. I like this stock a lot in particular because it's such clean key levels. It's also got decent RVOL over 2, is pretty good on the short term. I believe it's also still good too. Yeah. So yeah, this is one that I like keeping an eye on. I think it's got an interesting setup. So, I mean, that's the big thing that I think you should keep an eye on. I was kind of surprised that China didn't get a bigger boost after a lot of those AIs came out while I was vacationing. So I would be interested to see how this starts to play out maybe over like the next 2 weeks. Get 2 weeks to see if we can get another bounce and continuation. I would be kind of surprised if the shift from US to global markets doesn't persist a bit longer, right? And as I talked about last week, we'll go watch that video last week if you want to know my thoughts on that. And then leave a comment about how I'm not shaved and I look so fat because you guys don't understand camera angles. I am kind of fat though, so that's fair. I think that's all I got to say, guys. Make sure you subscribe, hit the like button, check out the newsletter, join the Discord. We're gonna make some good money this week. It should be a pretty easy week, up or down, sideways. There's always opportunities. When you get, I was about to say stock pickers market, but this is honestly where you go massive short. This is right now the way I look at this. I do my review on Sunday. I'm looking over the charts, and the number one thing I'm thinking right now when I'm doing my review is, wow, I did not buy enough puts Friday. So that's how bearish I am right now. I don't think I got short enough at all. This is starting to get to the point, by the way, where I don't want to get rid of. Oh yeah, here I already have gold up. There it is. Where I might be thinking about taking some gold off. This will get smacked around a bit if the market continues to sell. Now here's the thing. This still does not look done to me. It still just looks crazy strong. Just crazy strong. Oops. Why I'm not clicking the month. I mean, just crazy strong. GDX. So here's the thing with GDX is like I have, a notable amount of GDX also in my long term, but I want it more as a trade because it's serving more as a hedge. That's working very well, by the way. And I'm glad I added it along with the gold near the beginning of this year because gold's only up like another 10% year to date. And GDX is 30-40% year to date. So, yeah, just beautiful. Beautiful rallies. And this is just now breaking out. It looks like we came and we back tested the breakout here. Take me to the 4-hour. Really? Is this not enough time for me to see that cup? I really do gotta go to let's go to the daily. So that candle came right under the 45. We need a quick pop. We need a quick pop back up tomorrow. Or that could be the rollover. It's still looking good. That weekly looks like it still could cook. I'm surprised we didn't get more squeeze on that multi-year breakout there. I think people are scared to buy here, but I see this later in the year going much higher. With options, I do like, and I have been taking some profits, but for shares, I like continuing to hold this. Because even if it crashes with the market, I think this is the first thing to recover, especially if inflation starts to creep back in. I think a lot of that's structural. You know, what we've seen with tariffs in the past is companies actually eat a lot of the pain. And what that means is that it's a huge drag on GDP. So then you're risking recession, but they're trying to expedite the taxes. You know, this is a lot of the macro stuff that we talked about a lot, and so much of it is subject to change on a dime from a Trump tweet, right? And then it's kind of wildly shifting. So, and even as we've seen with the technicals, like this flipped on a dime last week. So, you know, the only thing that's you've been really able to hold with you know, duration, you know, what I mean by that is like how long your expiration, you know, go for like long-term swings, has been basically shorts and gold, and that's literally it. I mean, there's, you know, China kind of has been, but you have these wild overnight gaps, especially if you're in something like Baba that just, you know, you'll shave off 30% of your returns overnight on a wild gap up, and it's really hard to hold through that crap. Europe might have been, you know, you could have played the GEX, you know, like Germany or something. That's had great performance, but besides basically those themes, any individual name that you go for, or even if you're like in small caps or bonds, or there's just, you have to be shorter time frame. You have to be able to quickly shift on a dime, and more than ever in this type of market environment. And that theme is pretty much likely to persist until emergency rate cuts and QE. So you pretty much have to stay in that mindset of, I'm going to ride the waves, I'm going to go with the currents, and you're going to have to be willing to, you know, keep that thinking in bets and probabilities mindset more than ever, you know? Because even though, I mean, just think about it. Like, at the beginning of this year, I had such a tough time. And even now, I'm like getting caught up on positions that, you know, at most years would play out beautifully. Like this bounce would play out beautifully. You know, you could say, well, it was always a bear flag. But you know how often these bear flags don't turn into anything and then just rally back up, right? Especially in strong markets, you know. And I thought, well, we're hearing news about early tax cuts, and it seems like most of the tariff news is priced in. Then Trump's got more. So, you know, stuff like that. Let me fix this. Stuff like that can catch you off guard. You got to be aware of it, right? And you have to be able to pivot on a dime. You don't want to be sculpting out your ideas in the market more than ever. All right. I'm getting a little ranty. We're getting a little repetitive, which means it's time to end it. Y'all have a good night. God bless.